Glad to see you. Look at these markets, huh? How about them apples? Not bad apples, huh? Not bad apples. Indeed. Look at that. Woo-wee! Woo-wee! You see, when you do the right analysis, you know what to look for, you think critical, you don't listen to the media, you don't listen to, you know, so-called experts on Twitter or on MSNBC or anything, and you just do the work yourself. The conclusions you come to when you know what you're doing will be correct. And this is a perfect example of it. We've been tracking this for quite some time, tracking the S&P, the Dow. We've looked at everything, calculated everything, examined everything, and it pointed in the direction that the markets were going to drop, and it pointed in the direction that gold was going to drop, and that's what's taking place now. Look at that. Broke that trend line. Remember we were watching that trend line? And I added to my position with the anticipation of that trend line breaking. That's what I was watching for. Because why else would it be sitting at that trend line? What, to go up? Is that what was going to happen? The chances of that happening were so slim, like, minimal. The chances of price rallying up from that trend line were so minimal, it was ridiculous. Why? Well, price just responded to a supply area on the daily chart and dropped quite significantly from that area down to the trend line. Was the trend line something that was important to us? No, it wasn't. Why? Because demand zones back here were taken out. Okay, remember the distance between the trend line and the demand area? Not good. Even if it were a legitimate upward trend with no supply force coming into play, wouldn't have been good. So it broke. So the trend line's there just for retail purposes, just so that they can get confused and look at it and think that there's going to be a reaction from it. That's all. But look at that pacing candle right at that trend line. And look, what do you think is going to happen next? Break of this, and then supply. Right there. Another area to base risk off of. So we now are getting another area there that we're going to be able to base risk off of. Okay, what do I mean by that? Well, whenever you add to a position, you got to do it knowing that there's a certain area that you can base your risk off of. So if we have a nice area of supply created there, then we can have a mental stop loss up here, right? See, when you trade options, you can't really put a stop loss. I mean, you could put a stop loss on your option, but how would you do that? How would you know? Because the option performance is based on what's happening on the charts here. I was going to contact the broker and find out that if I trade an option based on an asset, can I have that option, can I exit that option, kind of set up an order so that if an asset hits a certain price level, then that option closes? That might be possible. Because then you could put like a stop loss saying, if the S&P rallies above 4,000, exit my position. Then you can do something like that. I don't think it's possible, personally. So we'll see. So let's analyze this. Remember we talked last Friday, and I should have gotten to a position at that time. I just was watching, and I was like, we were talking about that option to get in and to sell a call option up here at the highs. Right, price was up here. We were talking about selling a call option, and I just got busy with other things, and I didn't decide to pull the trigger on it. But over the weekend, as I saw this starting to take place, I was like, oh boy, that's when I should have made the move, right? Yeah, up and then starting to move down over the weekend. And I said, oh boy, yeah, I should have got in. Were you guys thinking the same thing? Did any of you get in based on what we were analyzing last Friday? It was a great trade because the option went from like $11 being worth $11 to like $6 or something, or $7. It was incredible. I was like, oh my gosh, I could have sold it at like 10 and change. And then over the weekend, it dropped down to 7. Whew, gosh, that would have been a beaut. But oh well. So here's the situation now. So I got in here, I got in there. And this was with this supply in play, knowing that there was a chance that it was going to rally up to hit the meat of the weekly supply. But whatever, at the end of the day, what was going to happen was time was going to play out, even if it went higher. Okay. It was going to be time, right? Eventually it was going to drop. So yeah, the trade would have went against me a little bit, but I wasn't concerned. But when price came all the way down here to the trend line, I was like, okay, I see what's going on here. There's a very good chance the price is just going to drop from here, which is why I entered there in anticipation for that. So I'm glad I did, because now it's, as you can see, it's playing out quite nicely to the downside. Let's change this here. Okay. Another thing that helped me to get in was, remember how I told you that if you look at the markets, they should all be working alongside each other. And the Dow was here. Okay. So it had already broken through the demand area. Okay. Isn't this a similar demand area that we have on the SPY? Yeah, it is. Isn't this a similar trend line that we have on the SPY? Yep, it is. Okay. So you see how on one chart it broke, but the other one it didn't? But it was foreshadowing the move that was just about to happen. You see how that happened? That's what helped me make my decision, is seeing that. So I saw that and I said, yeah, chances are it breaks down. So there we go. And what were we looking at here? Reduction of shorts, yeah. So data's coming out. It's going to be interesting. Would like to see that. Obviously, what we're going to end up seeing is the banks piling into short positions. What a surprise, right? Should be no surprise there. And you got to love this article that comes out. It just goes to show you how little respect people get. Okay? It just goes to show you how little respect people get. These people don't care about humanity. These people don't have a conscience. Imagine working for this newspaper, and who knows how much this guy, I don't know how much this guy knows. I don't have a clue how much he knows. All I know is he has the nerve to come out and say, markets keep making the same inflation mistake. Like, how dare you? I tell my wife these things, and she's like, oh, these people are they're too much. And it's like, yeah, exactly. Investors made a huge mistake over the summer, misreading the economy, and even worse, misreading the Federal Reserve. How dare you? We've been pointing out in these articles just how they have been trying to influence investors to buy the market. How many times do they write in their articles? Investors are thinking this, investors are thinking that, investors are doing this, investors are thinking about doing this. It's constantly the same thing. It's all nonsense. Okay? It's all nonsense. Um, and so, and now investors made a huge mistake. How dare you? You're the ones that told them to buy the market all throughout the summer. And then after you lure them in, then you come out with this article. Investors made a huge mistake over the summer, misreading the economy, and even worse, misreading the Federal Reserve. Oh, they misread, all right. Yeah, they trusted your articles. They misread. They shouldn't have trusted your articles. But you see, I point this out because this is what these newspapers do. This is their MO. James McIntosh. Good for you, James. Hope you're proud of yourself. What do you think? You think these guys know what they're doing? Because I ask myself, I'm like, if they don't know what they're doing, like, you know, who's telling them to write that, you know, people are making such big mistakes? I mean, I don't know. How do you think that works? You think these guys really know what they're doing? Makes me really wonder. Senior columnist in 2016 for almost 20 years at the Financial Times. He was 20 years at the Financial Times. Recently as investment editor and writer of the Short View column. He's a graduate at St. Catherine's College, Oxford, where he gained a first-class degree in philosophy. Oh, oh, wow. Wowzers, look at that. Huh? Huh? Ooh. So think about it. You work for Wall Street Journal, okay? You go once a week to meet up with the boys from the central banks, and you go to your gentleman's club. You're smoking your cigars. You're talking business. You're talking money. You're talking about future agendas, and you're talking about the role of the Wall Street Journal and manipulating people's minds into doing the opposite of what the bankers need you to do. Who better than to hire somebody to write your articles who's got a first class degree in philosophy and psychology? I mean, isn't that just wonderful? Isn't that just one? I got to screenshot that. I just got it. That is just beautiful. That is just beautiful. I should call him out on Twitter. I really should. We should call him out on Twitter and say, "Yeah, your newspaper said this and this and this and this and this all summer, leading people into making that decision, and then you have the nerve to come out and say that everybody made the wrong decision." Well, it was your newspaper. Thanks to your newspaper. Unbelievable. First class degree in philosophy and psychology. Wonderful. So if anybody knows about how the mind works, if anybody knows about, critical thinking, logical thinking, how people will interpret certain sentences and certain words, this guy will know it. Unbelievable. Yeah, he spent 2 further years at the University of Postgraduate Study of Philosophy before entering the real world. He has 2 cats and 2 children.